Florida residents, have you hesitated in looking for your next home because you're worried about an increase in property taxes? If so, I'm here to explain an exciting benefit for Florida homestead owners so you can consider your next home purchase. I know you're probably very familiar with Homestead Exemption if you're a permanent resident here in Florida. However, are you aware of the benefits of the Save Our Home Act and how you should take full advantage of the benefits of portability on your property taxes? Hi, I'm Kristy Holm with the Welcome Home Group, brokered by eXp Realty. I've committed to creating videos in order to serve the community I love. I'm turning mundane conversations about things like taxes into easy and exciting conversations. Because guess what? Saving thousands of dollars is fun. Okay, let's talk about portability. I'm going to take you to a slideshow I've created to make this a visual conversation. Let's go. The agenda is we're just going to briefly review Homestead Exemption because most people already know what that is, and have a very clear understanding of that. We're going to talk about the Save Our Homes Act. We're going to talk about portability and how to make sure you're getting the full benefits. And I'm going to give you some additional resources. So Homestead Exemption. There is a standard $50,000 homestead exemption. You must be a permanent resident of Florida and your driver's license must have your address on it. What people don't know is there are around 24 other exemptions. For example, disabled veterans, deployed military, and for this senior citizens, there's something called the super senior long-term exemption. So check with your local county property appraisal office for a list of these exemptions. Okay, the Save Our Homes Act, that the homesteaded properties would never see an increase of more than 3% a year, or the consumer price index is referred to it as a CPI, whichever is less. Currently, the CPI is about 2.6, for example. So this year, if it stayed at 2.6, they would use 2.6, but you would never see an increase in your taxes and your property taxes more than 3%. And this is important to understand because I'm going to actually show you how that works. So property taxes explained. When you purchase your home, now I have created a graph to give you this visual. What I did is I started at 2008 because that's when the Save Our Homes Act started. And I just went every year, 2009, 2010, all the way up to this year. And then instead of putting dollar amounts in here, because that tends to confuse the description or it just confuses people. So I just put dollar amount being low and then going all the way up to a bunch of dollar signs so that you can see that this is an increase in price. So whether you have purchased your home in 2008, 2009, 10, 11, or even earlier than this applies to you. But just to make this an easy example, I just started at 2008. So these lines should actually meet, but you start at a certain purchase price. You're going to get two values on your house, and one is an assessed value and one is a market value. The assessed value is where property taxes are based, and the assessed value minus homestead exemption is the taxable value. And then there's something called market value, and that's what your home in today's market is. That's what you would sell your home for. Okay. So what is portability? Portability is in Florida how it allows homesteaded residents to take up to $500,000 of tax benefits with them when they sell their property and they purchase another property in Florida. $500,000 of portability roughly equates to $10,000 a year lower tax bill. So is this important? Do I have your attention? Is, $10,000 a year in savings? Is it worth it? Is it worth it to understand what portability is and how to use it to your advantage? Absolutely. So the way that we calculate portability is we take the assessed value, which is the original value based on the purchase price, okay? And remember, it can only go up at most 3% a year, okay? So this assessed value is staying relatively, like, it's not, you're not seeing, much increase in it throughout the years, right? But the market value, right around 2013, it started increasing. And even, this past year, we've seen a spike in market value. So portability is calculated when you take the market value and you subtract the assessed value. So all this value in between here is portability. I don't like giving numbers because it confuses people, but let's just say, for instance, your assessed value, what you're being taxed on, is $200,000, but your market value is $500,000. That's what you could actually sell your house for. Your portability, just for easy math, would be $300,000. And so you take that $300,000 and you use it on your next home purchase, and it drops whatever that home purchase is. Say you buy a house for $700,000. So you subtract the $300,000, and now you're only paying taxes. You're starting at $400,000. Okay. Where do I find my market value and assessed value? Okay, there's two places. You can go to the tax rolls, which, if you have a property appraiser website, it's specific to the county you live in. So for Palm Beach County, we often refer to it as PAPA. It's Palm Beach County Property Appraiser, and I put the website in here, www.pbcgov.com. So there's also a document that you get every August. It's called a trim notice. It's the truth and millage notice, okay? And it's a piece of paper. It looks like this. On this piece of paper, you will find two values, and one is market value, and then the other is the assessed value. And remember, the market value is what your house would sell for, and the assessed value is what you're actually being taxed on. That cannot go up more than 3% every year. But wait, Kristy, my market value seems too low on the trim notice or on the tax rolls, wherever you're going to find this value. What do I do? Okay, so let's just say you look at your trim notice or the tax rolls, and it says, that your house is worth $500,000. Say you've had a CMA, or you have thought about listing your house for sale, and you've gotten a professional broker's opinion on what your house could sell for. And it says your home on the trim notice says your home is worth $400,000, but an agent has told you you could get $500,000. The comps suggest that you could get $500,000. So you have $100,000 difference in what the property appraiser is telling you that your market value is and what it actually could sell for. So you can leave $100,000 on the table and not take $100,000 in portability with you, but I would not do that. To me, it's just leaving money on the table. So what you need to do is, if you're not currently selling, do nothing, because it doesn't matter. If your market value says something on the trim notice and it's not what it is, you do not need to do this. You don't need to go through the process of changing your market value on the trim notice. But if you are thinking of selling in the near future, you can go to a free portability checker and have that checked. You can go to portabilitypros.com, or you can go to floridarevenue.com, and you can start the process of getting ready to have that changed. So if you're currently under contract you need to go to floridarevenue.com and you need to fill out some paperwork to get that market value changed. So portability requires a separate filing. It's not the same as homesteading. It's a separate process. So you need to file for portability. But if you do not change your market value before you close, they will take the market value that has been assigned to you by the property appraiser. So it's really important to know that you get that changed before you close. So frequently asked questions. Will changing the market value on my tax rolls or term notice increase my current property taxes? No. We go back to the assessed value. That is how they determine what your taxes are. They do not use the market value. Okay, so what happens if I do not change my market value and I close on my home and I want to apply for it after I close? Okay, so you can't change your portability amount after you've closed. You will still get portability, but it will calculate it using the property appraiser's value on your tax rolls or your term notice. So I'm just reiterating, if you want your market value changed and you want the max amount of portability that you can possibly have, you need to do some, work to get there. The other thing that I didn't put on here, but what if you're downsizing? You still can get portability. They use a different method of getting it. They actually divide it's a longer discussion to have, but you still want to apply for portability and you still want to have that market value adjusted to what your home actually today could sell for. Thank you so much for attending this little PowerPoint presentation. If you have any more questions, please feel free to reach out to me. I'm Kristy Holm with the Welcome Home Group, and I'm here to serve.
Thank you for watching. It's a core value of mine to help you save every hard-earned dollar as if it were my own. So please comment or feel free to connect with me anytime if you have any further questions or needs. There's never an obligation, and I'll see you in the next video.